Right, I will briefly discuss what we have already discussed on government budget. Now we said to take a mixed economy, there are two main sectors, private sector and the public sector, or the private sector and the government, public sector. Then the private sector take decisions, economic decisions with regard to prices, the quantity production, the wages, depending on the market forces, signals coming from market forces, demand and supply forces. If there is higher demand for face mask, they invest funds on face masks. If there is a higher demand for sanitizers, they invest, they buy and sell, or sometimes they produce. That is the normal procedure. But the public sector doesn't have that mechanism. They can't use demand and supply the forces. They have to use the budget, government budget, when they allocate resources, education, for health, for the highway development, right? Then budget should be approved by the parliament. Now our budget is coming on November 12th. The budget should be approved by the parliament, because the parliamentary members are elected by people of that country. In other words, government's budget should be approved by the people of the country. If it is not approved, government can't proceed. Government has to dissolve the parliament and go for a new election. That is the constitutions, the provisions in the constitutions. Budgets, government should get the parliamentary the approval for their budget. If not, they have to go for new election. Okay. Then next question we ask, what is the government? Government type of goods and services the government produce. There is a difference between the type of goods and services produced by the government and that are produced by the private sector? Yes. We said private sector produces private goods. Public sector, or the government, let's say, produces public goods. Then we ask the difference between public and private goods. Public and private goods. Public goods are non-excludable. You cannot exclude certain people living in certain districts consuming that good. Non-excludable property. But the private good, loaf of bread, you can exclude. If you don't pay the price, you can't buy that private good. But the public good are non-excludable. Then public goods are generally non-rivalrous. Private goods are rivalrous. What does that mean? When you buy a private good, let's say a loaf of bread, the amount available to other consumers will go down by 1. If you buy 10 loaves, amount available to others will go down by 10. But in the case of public goods, it is non-rivalrous. What does it mean? Amount available to others will stay at the same level. Law and order, peace, street light. When you go under this street light, anybody can get the service of that. Non-rivalrous, non-excludable. Public goods are non-excludable. The public goods are non-rivalrous. Private goods are excludable. Private goods are rivalrous. Another property, weak property, sometimes some textbooks say public goods are non-rejectable. Even if you don't like the public good, you can't say no. Non-rejectable. Private goods, non-rejectable. If you don't like that, I don't buy. If you don't buy K95, the face mask, you don't buy. If you go the other medicinal type, the face mask, and go for that. That is, you can reject other public goods. If you don't like, you can't reject that. Law and order, peace, you can't reject that. That is another property of a public good. Then we said, to perform these duties, governments needs money. Through the budget, they do the allocation. So budget, money should come to the budget. How does the government get the budget, the money? Taxes, mainly taxes. Non-tax revenue is there, coming from central bank, coming from railway department, coming from postal department revenue, but 95% is 98% of this revenue are generated through the taxes. It could be direct tax, income tax, pay tax, or it could be indirect tax, BTT, sales tax, value-added tax, indirect taxes. Okay? But direct tax, we cannot pass the burden, pass the tax burden onto another group of person. You can't ask if you are paying paid. You can't ask the friend to pay the paid tax. But indirect taxes can be passed on to another party. Traders, wholesalers pay the VAT, but they add that to the price. And by way of increasing prices, they pass the burden to the consumers. Indirect versus direct. Indirect versus direct. Right? Now, then we discuss some numbers. Today, of course, I will get the presentation first. Yes. Today, of course, I am going to discuss some numbers using the 2020 budget and some definitions of some numbers. After that, we will discuss a new topic, budget. Already we discussed who prepared the budget has a theme, then the medium-term targets, any budget, medium-term targets, then the responsible, the institutions, how does the treasury prepare the budget. Then we discuss fiscal policy. The fiscal policies are the policies relating to government tax policy, revenue, expenditure policy, financing deficit policy, tax policy, whether to increase taxes or decrease taxes. Now this when this government came into power in the first budget, previous budget, then the government reduced the VAT from 15 to 8%. Huge loss to the government revenue. Now this time they might reintroduce these taxes. We don't know, right? But the government revenue is going down. Huge drop in the government revenue. So the policies related to taxes is the fiscal policy. Policies related to the expenditure policy, whether to increase teachers the salaries, whether to increase these teachers, pay these teachers, accumulated the arrears to the teachers, right? If the government decides, that is the expenditure policy. Then the deficit financing. There's a gap between revenue and expenditure. We have a deficit. Deficit financing, government might decide, okay, we are going to finance this deficit using only the domestic borrowings, or using only the foreign borrowings. Then, or using combination of foreign and domestic borrowings, right? Fix the policies relating to the financing of the budget deficit, right? Monetary policy, of course, it is the policies relating to the money supply, interest rates, repo rate, reverse repo rate, bank rate. Time to time, government implement these monetary policies. Central bank, that is done by central bank. Fiscal policies are done by the treasury, implemented by the policy. We discuss these main types of expenditure, then the sources of revenue, indirect versus direct. We discuss main forms of taxation. Taxation more important. Which taxation is more important? Tax revenue versus tax. So why can't we increase the direct taxes. People say, okay, why do you tax these indirect taxes, implement indirect taxes, the sales tax, VTT, value added taxes, then our consumer income will go up. Why don't you tax rich people? Why do you tax rich companies? Increase taxes. Nowadays, direct indirect proportion is direct 20, indirect 80. So when you pay, we all are paying the indirect. We all are indirect taxpayers, but we don't have a say, right? But the direct taxes only 20%. People, companies, corporates pay only 20%, contribute 20%, right? Then people can say, okay, increase direct taxes, but there are reasons. You can't indefinitely you can't increase this low per capita income. Most of our tax base is very narrow. Teachers are not paying taxes. Sometimes government doctors are not paying taxes, right? Then like that, it's a very narrow. Self-employed people are not paying taxes. Partnerships, companies, village level boutiques, they are not paying taxes. Three-wheel drivers are not paying taxes. Then the cab drivers, are not paying taxes. Maybe the companies pay taxes. So therefore narrow. But in developed countries, it is very broad. Everybody is paying taxes. Even cab driver, drive the car in Singapore, they are paying taxes. But government get the taxes, at the same time government has huge subsidies. They are living in apartments. That food prices are very low, right? Because the direct taxes, they pay taxes. That's right. Then that is another reason. Tax base. Other reason is people's income they are getting from not monetary income in kind, health expenses, uniforms, meals, lunch. Harbor, people working in the harbor, the ports, they are getting their lunch free, right? So you cannot quantify those things. That is the thing. The low level of money income economy, so that a large percentage of income earned in kind cannot be taxed. The tax machinery is not capable of covering the potential taxpayers. That is relating to the tax base is there. Still, tax department cannot capture get all these people. People avoid taxes, evade taxes, tax avoidance, tax evasions, right? So that is the reasons you can't increase the direct tax rate. These are the reasons. Right, best tax rate, image accounts in the government. We discussed last time. We have balances: current account balance, primary account balance, budget deficit. Okay, now today we are going to discuss using numbers. We are going to calculate these numbers. That is very important. Right? Now I'm going to numbers. Right. This is 62, 63. This one is overall the budget numbers. Here we have revenue, expenditure, and we have all the balances: current account balance, primary balance, overall fiscal balance. Right? Now, using these numbers, we can calculate. For example, current account balance is revenue, that is revenue minus the recurrent expenditure. Current expenditure. Total revenue minus recurrent expenditure is the current account balance. Total revenue minus recurrent expenditure. Only recurrent expenditure, not the capital expenditure, right? Is the current account balance. That is also called government savings. For example, we have current account balance minus for 2020 minus 180. That means 1 trillion. 1 billions. 180 billion. 1.180 trillion, huge. 2019, again there's a negative savings, government savings, current account balance you can put down, government savings, negative, minus 533 billion. 2020 has increased trillion, mainly due to the COVID issue. Health expenses increase, recurrent expenditure increase, health people's overtime, salaries, health services, people working in the health service, sometimes 24-hour service, their wage bill increase. These are the reasons for current account balance. Then you have to purchase these vaccines. You have to pay huge sums of money. Pfizer coming from England, AstraZeneca coming from China, then the Madonna coming from US, and you have to pay. You are paying some free of charge. WHO is giving. In addition to that, if you want to pay, want to buy money. That why current account balance is huge, negative 533. It was double, nearly double savings, negative savings. Right? Then overall fiscal balance is government total revenue minus total expenditure. Total revenue and grants minus total expenditure and net lending. That is also again trillion. You can see 2019 the 1.4 trillion. It has increased to 1.7, nearly 1.7 trillion. Huge, right? Then primary balance is, you take this the overall balance, deficit 1667, then you deduct interest payments. Value is there in that 6.3, table 6.3, table 6.3. Payment is amount at 298,302. Interest payment, total interest on foreign debt on the domestic debt. When government get a loan from the domestic sector, EPF, ETF, NSB, Bank of Ceylon, People's Bank, the domestic sources, or they get the money from the foreign sources, foreign loans. In the case of grants, you need to pay, but for loans, definitely you have to pay with the interest. Now, that interest, interest on foreign loans, interest on domestic loans, sum is 980302. Remember, budget deficit is 166. 1667688. You take the number only. I can calculate 11667,688 minus you deduct the interest payment. Sorry, interest payment is how much? Interest payment is 980,302 minus 980,302 equal 687,380. 687,380. That is called primary balance. Then. Here, 687,386. 687,388. What does that mean? Overall budget deficit is there. You deduct interest payment. So in the primary balance is what? Revenue minus, in the primary balance you have revenue minus non-interest payment. Revenue minus non-interest payment is the primary balance. How do you calculate? Get the budget deficit 16667. Take out interest payments. So in the primary balance, interest payment is not there. Primary balance 2019 minus 537, 2020 687. But if you check 2018 numbers, it was positive number. Very good sign. Primary balance was positive. It was good actually. Budget deficit minus non-interest payment is positive. Right? That's a good sign. But now 19 and 20 it is negative. Right? Then up to this point you can understand what is current account balance. what is overall balance, what is primary balance. These budgetary balances are very important. Then what will happen? Government has to finance the budget. 1667 minus should be the finance using any sources. 1667. How do the finance? Borrowings. Foreign financing, domestic financing. Foreign financing, domestic financing. 2020, foreign financing is very low. 83 billion. 83 billion. That is also negative, minus. You are paid. That's interesting. 2020, you don't borrow from the foreign sector. Your entire overall fiscal balance is financed using domestic sources. That's a very good achievement, right? Okay, domestic financing. Then 2019, if you take foreign financing, borrow from the foreign sources, foreign loans. Then the foreign loans, sometimes government go and buy, get loans from the market rate, market borrowings, non-market borrowings, right? 542 billion. 542 billion. Domestic financing, EPF, ETF, pension funds, bank borrowings, central bank borrowings, right? 896. Now what happened? This entire in 2020, entire budget is financed by the domestic sources. Foreign sources, negative. Negative means you settle some foreign debts. It is minus, right? That's a good sign. Foreign financing, domestic financing. Right. We'll see now this year. We will see what will happen to our these balances. What is current account balance? What do you think? It should be higher or lower than the 2020 level? Answer my question. What do you think? Next year, the current account balance, higher or lower than, or the lower than the 2020? You can think of? Definitely higher. Overall balance should be higher. We don't know, but we can guess, because the 2021 is a challenging year. So budget deficit might grow higher than that. Sometimes government might have some plan to cut down some expenditure and get the budget deficit down. But think about 2000. The next year budget is coming on November 12th. I want you to go through these numbers. What is current account balance? What is primary balance? What is overall balance? How does the government finance this the total deficit? Okay. Now we'll go to the 6.2, table 6.2. Yes. I said, when you calculate GDP, we said one of the uses of GDP is to calculate, express the budget numbers as a percentage of GDP. That's why we need GDP calculation. You get the budget deficit divided by GDP. You get the total grants divided by GDP. Expenditure net lending divided by GDP, country's GDP. As a percentage, you can see total revenue grants, total revenue, let's say 12.6 to 9.1. Huge drop. Government revenue has gone down. 0.6% of GDP to 9.1% GDP. You don't have enough money to perform, to provide public goods. Then tax revenue, what has happened? 11.6 to 8.1. Huge drop in tax revenue. As I said, government as an entity lazy unit. Government live on other people's money, other agents' money. Tax revenue, non-tax revenue, and non-tax revenue is negligible, right? Only 1% of the total revenue. Yeah, tax revenue 11.6 to 8.1. Huge drop in government revenue. Drop in value-added taxes, 15 to 8%. Government cut. Then the sugar price, huge drop in sugar taxes, the import tax, huge drop in import taxes. Now these are the reasons for very low tax. Now this is one of the challenges to the next budget. The new finance minister. You see what will happen to this tax revenue, the 11.6 to 8.1. You can't go on like that. You have to definitely increase the tax revenue, 9%, 10%, 11%. Otherwise, you can't perform the due. Taxes are coming down. This is one of the huge problem in the budget. Challenges in the budget. Now you can see next year budget, they might, how to get this tax revenue? Definitely increase the tax revenue. You have to impose certain taxes. We don't know. Taxes. Either you have to increase value-added taxes, income taxes, includes pay taxes, increase sugar tax on imported items. We don't know. Purpose is to get higher taxes percentage. Expenditure, what will happen? Expenditure, there's some relief. What will happen 2019 to this point, it has gone down, but recurrent expenditure has increased 16 to 17%. 16 to 17%. 16 to 17% expenditure has increased, right? Maybe due to the health sector expenses, salaries and wages, overtime payments increase. This may be the reason. Okay. Percentage of GDP. Budget deficit, let's check. Budget deficit, what will happen? Budget deficit. Hello. Packing with one of my professors, yes. Then the budget, what will happen? Current account balance, 3.2 to 7.9. Absolute number billions increase. Percentage is easy to compare. 3.6 to 7.9, huge increase. Overall, 9.6 to 11.1. Some people say it is not 11.1, deficit is around over 12%, 15%. Some people, we don't know. But these are official numbers, now you have to believe these numbers. 9.6, but any deficit is increasing. Primary balance is negative increasing, minus. Why these percentages are important? Because when you see the international level, other countries' budgets, you can't, they prepare their budgets in their own currencies. Malaysia ringgit, Indian rupee, Thai baht, US dollars, Sri Lankan rupees. So you can't compare these absolute numbers, billions or trillions. There's no meaning. The different currencies. No? But these percentages are easy. As a percentage of GDP, so it are internationally they are comparable. You can compare. Sri Lanka's budget deficit, the total, the overall balance is, the fiscal balance is 11.1%. Malaysia, maybe 12%. India, maybe 8%. You have the numbers. Compare some idea. But if you tell in Indian rupees, Indian rupees, Malaysian ringgit, Thai baht, that's no meaning. Percentages are important. That's why GDP is important. Value divided by the GDP. Okay. Then we go to this tax revenue. What are the key items? Then what will happen in 2020? Tax revenue, income tax 427 to 268, huge drop. Value added tax 443 billion to the 233 billion, huge drop, nearly half of this. Value-added tax, there's huge cut in value-added tax rate. That is the reason, right? Excise taxes, 399 to 321. Import duties increase. Other taxes drop. Non-tax revenue drop. So main reason for drop in tax revenue is the drop in income taxes, 427 to 268, value-added taxes, 443 to 233, right? Excise taxes also, excise duties increase, cigarette prices, then the liquor prices, the people consumption drop. That's the country was shut down for a long time. No? That is excise duties, excise taxes drop. Then government gave permission to open this liquor bar, wine stores, right? Sale of liquor. Then what will happen? Main objective is to get higher revenue, high excise taxes, higher taxes, right? Excise taxes. This is a good indicator. If someone asks, okay, tax revenue is coming down, tax revenue as a percentage of tax revenue is coming down from the 11.6 to 8.1. These are the numbers. Income taxes dropping, value-added taxes drop. Right? Now you can see the percentages. Again, percentage of GDP. Tax revenue 11.6 to 8.1. Income tax 2.8 to 1. 1 percentage point, 3 to 1.6, 1.4%, right? Then excise duty 2.7 to 2.2, 0.7 to 0.8, right? Huge, so one increase. Okay, then we go to the expenditure 0.3. Expenditure. Now, when you read this, there are two types of expenditure: recurrent expenditure and the capital expenditure. Any other budget, any company budget, you have the recurrent and the capital. Here also same, right? Other thing is, remember when they prepare the budget, you have the accrual basis. Accrual basis, receivable and actual. Receivable and actual. Receivable means this year you are not getting the income. But next year you are getting this income, receivable income, receivable payable expenditure. A budget is prepared not on this accrual basis, direct terms. Actually, what actual expense, actual basis, not a receivable and that. So that is the current. This spent 1 billion, but you have to. You expect another 1 billion from the next year related to these expenses, but you don't include that in the budget. Right. Recurrent expenditure, read this when you go through, please understand what are the key items. Recurrent expenditure, salaries and wages, interest payments, transfers and subsidies. These are the three key items. Salaries and wages, total expenditure 2,548 billion 2020. If you can't tell me, please tell me, right? Please, I'm not going to, because everything I'm not going to, for this lesson I'm not going to the board, but next lesson I will definitely use the board. So the 2548 is the recurrent expenditure. Capital expenditure 795 billion is the capital expenditure, total expenditure. Then you have these are the key items. Total expenditure is 3,040 billion. Let's see the recurrent expenditure. What are the key items? Expenditure on goods and services, salaries and wages mainly. Interest payments, transfers and subsidies, salaries and wages, interest payments, the transfers or expenditure on goods and services, let's say 974, interest payments 980, transfers and subsidies 717. under recurrent expenditure, these are the three key items. Now, even expenditure and goods and services, the salaries and wages is the huge. Total expenditure, the expenditure 7974, but the salaries and wages 794. Nearly more than 80% salaries and wages. Interest payments 980. Transfers the 717. What is the transfer? What are the transfers? Samurdhi, pensions, fertilizer subsidy, right? Transfers to household and other. These are the transfers. You don't get any service back. One-sided payment transfers. One-sided payment. You just give money. Pension. I am getting a pension, but my company, my bank does not expect any service. I am not supposed to provide any service. Now I am getting my pension for the service I rendered long time ago. One-sided payment. You don't get any service. Transfer payments huge. Transfer payments in these capital transfers 717 billion. Expenditure 974 billion. Interest payment 980 billion. Huge item. Interest payment is huge, right? 980 billion. Therefore, recurrent expenditure, the composition is you can study. Mainly expenditure goods and services, interest payments, then the transfers. Expenditure on goods and services, you have a main item is salaries and wages, of which capital expenditure. Capital expenditure is what? Capital expenditure is expenditure, the outlay to acquire assets, purchase assets, lifespan more than 1 year. Schools, roads, hospitals. When government invests this money, you acquire acquisition of real assets. We don't say investment, this is government investment. We say it is acquisition of real assets. Government acquires hospital. Government acquires school. Education department acquire a school. Road development authority acquire a road, highway. Right? Acquisition of real assets is that is capital expenditure 795. So total capital expenditure. Total the recurrent expenditure 2548. That is another challenge in the government budget. We said revenue is coming down. Now recurrent expenditure compared to capital expenditure is rising. Capital is investment. You see, investment expenditure 795, recurrent expenditure 2548. Recurrent expenditure, what is the difference? Difference. In terms of lifespan, you can define. But recurrent, another important characteristic, recurrent expenditure, government cannot say no to this recurrent expenditure. You can't say, okay, we are in a trouble, the other countries, we will pay you interest after 1 month, right? Salaries and wages, we are in trouble, we can't say teachers and doctors, we will pay your monthly salary after 2 months' time. You can't say no, you have to pay. Pensioners, you can't say no. Fertilizer subsidy, no can't say no. Samurdhi, you can't say no. That is another difference between recurrent and capital expenditure, right? In terms of lifespan, monthly pension, monthly interest payment, right? Capital expenditure more than 1 year, acquisition of the recurrent expenditure. Increase in recurrent expenditure is another problem, another challenge in Sri Lankan economy. Our budget, revenue, increase in expenditure, recurrent expenditure mainly, then coming down for decreasing of capital expenditure also. The government doesn't have money to finance the capital project, investment project. How do they do that? They have to borrow from other country. To implement investment project, you get money from China, you get money from India. Advani come and develop this one of our ports, right? Then Kerala Pitia, we have sold that the 40% of government shares to Indian company, right? So and ask them to develop these things. That is so entire capital expenditure is financed by foreign borrowings, China, India. These are donor countries, no? Right, okay. But remember, this is the case not only for 2 years, 3 years, 4 years time. For last 10, 15 years, this is the trend. This is the path the country is moving. You can't say, you can't blame this to one government, this government, or previous government, or the government, Chandrika Bandaranaike's government. No, this is the fact. Maybe somehow or other, maybe it might increase. Sometimes corruption, sometimes wastages increase in the more or less it might increase the some regimes, but general trend is this: fall in revenue, decrease in revenue, increase in expenditure, increase in interest payment, increase in transfer payment, increase in salaries and wages. The fact, fall in, right? Okay. Now these are, you have to understand these numbers. You need to remember these numbers. The percentage, current expenditure, what happened? The GDP percentage is important. You can compare these country-wise comparison, international comparison. You can't do that using rupee values or the dollar values as a percentage. The current expenditure 6.1 to 17% increase. Then capital expenditure also that increase 4.1 to 5.3. See what happened to salaries and wages? 4.6 to 5.3 increase. Interest payment 6% to 6.5% of GDP. The transfers and subsidies 3.7% of GDP to 4.8% of GDP. You can see, right? The capital expenditure has increased. Acquisition of real assets 2.6 to 3.2. Maybe government hospitals. Capital expenditure, under capital expenditure, acquisition of real assets 2.3 to 3.2. Highways, expressways, hospitals, the schools, like that. Okay. Now, general idea about this government budget: various balances, current account balance, primary account balance, government budget balance. Then challenges. The Sri Lanka's budget is very important. Right? Then what will happen when you finance the budget deficit, either using domestic or the foreign sources? You have to borrowings. You borrow. What will happen? Our debt stock increases. Debt stock increases. Government has to pay its debt one day. You have to pay interest. You have to pay the capital. Pay the interest. You have to pay the capital. Either foreign or the domestic. You have to pay this. That is, our debt stock is rising. It was around 78% in 2015-16 period of GDP. Now it has increased 8%, 90%, 9%, now nearly 100% of GDP. Total debt, 98% of GDP. Huge increase in debt stock. Debt. You have to pay. You have to pay. Right. Then happen, 11, 10 now. 11, 10, yes. Now these are the key items to this year. To know, then I will go to the presentation, of course. Major accounts we discussed. Now the thing is, other thing is the surplus in the current account important. Surplus in the current account is so for government savings. But the thing is, if current account has a deficit, You cannot say it is bad. What is bad? Continuous deficit is bad. Continuously government dissave, it is bad. Understand? Like households. Households, what will happen now? We can 1 year or 2 years, we can have the revenue, our household income less than the expenditure. Save, but you can't go on forever. At one point, you stuck. Therefore, that's why savings important. But in the case of government, it does not necessarily imply it is bad. When compared to household sector, we can't borrow. You can every year, you can't finance. If you want to finance your household budget, you can't do using the borrowings. Savings negative. No. Government, of course, savings negative means it is bad. Generally, it is bad. You can't go on like that. But government contribute to the economy. Increase salaries and wages. Increase interest payment. Increase transfer payment. Sometimes these are the reasons for increasing negative savings. Current account, the deficit. Current account surplus is good if you can maintain, but that doesn't necessarily imply it is good. Right? Current account deficit means transfer payment, samruddhi payment, the pension payment increase. But in one way or other, you can argue like that. Current account, capital account is an investment. You can, okay. Overall budget deficit, we discuss. Using numbers, we discuss. Using percentage of GDP, we discuss. Please read this. Should a country run a budget surplus? Very important question. Do you think budget surplus is important? No, not necessarily. Deficit is okay because government contribute into the economy. Government provide public good, more public goods to the economy. That's a good thing. Because of that, the deficit, they have created deficit. Okay, corruption, these other things are wastages, they are there. But generally, budget deficit implies government contribute to the economy. Higher salaries and wages, higher transfer payment, higher investments, like that. Not necessarily. This is because a continuous budget surplus would mean that the government is not paying back to the economy. You save. You are giving back to the economy. But it has mobilized by way of taxes and other revenue. Remember, you get money from other people, other companies, individual. You have to give those distribute this to the economy. You have to look after the poor people. You have to look after the pensioners. You have to look after the disabled people, social services, important. You can say, no, we can't do that. Our savings are very important. No. Budget surplus does not imply necessarily it is good. Right? This is simply a contraction in economic activities, which would eventually lead to unemployment, economic stagnation, and finally loss in output. So, budget surplus means what? Contraction of economic activities, unemployment, economic stagnation. Let's discuss a little bit more. When there's a surplus, budget surplus, what does that mean? No investment, no new projects, no employment. There are people to get jobs. You don't say, no, our surplus is important. Budget surplus is important. Understand? So therefore, the budget surplus does not necessarily good. It might contract. It might shrink the budget economic activities. Right? That is also, but fortunately, this in our case, we are maintaining budget deficit for last 50 years, 70 years, except 1 or 2 years. We have budget deficit, huge deficit. Right. Surplus may be desirable once in a way, but not appropriate continuously. What is desirable is as far as possible to achieve budgetary balance. If you can balance the budget, that is the ideal level. Revenue, expenditure, balance. Now what is happening? Revenue, expenditure huge. Then deficit. Balanced budget is okay. How can government finance the budget deficit? Budget deficit financing is important, mainly from borrowing from the domestic economy and foreign sources. Domestic borrowings and foreign borrowings. Borrowing from the domestic sources can be classified under the following. Borrowing from domestic non-bank private sector, ETF, non-bank private sector. Borrowing from domestic commercial banks, People's Bank, Bank of Ceylon, other banks. NSB, borrowing from commercial banks, right? So NSB is also coming under non-banking sector. Borrowing from the central bank. Central bank. You borrow from the domestic non-bank sector, EPF, ETF, borrowing from domestic commercial banks, borrowing from the central bank. These are the domestic sources. Central bank borrowings, commercial bank borrowing, then the non-bank borrowings. Three sources, right? Then these sources have different impact on the economy. If you borrow money from either central bank, the commercial banks, or the EPF, what is the benefit? Benefit is government has the money to implement their future plan. That's true. Future plan, investment plan, the current expenditure plan, or only future plan, next year plan. That is the benefit when you borrow. But there's a cost. If the government get money from the central bank, if government get the money from commercial banks or the EPF, ETF, you can borrow. Each source has specific cost. Borrowing from central bank or the commercial bank, it is inflationary. Of that, borrowing from central bank is highly inflationary than from commercial banks. Why is that? Banks as a special type of animals, creatures. Why is that? In the economy, banks can create money. They have the position to money creation, create money. Hospitals, Ministry of Health cannot create money. Ministry of Education cannot create money. Money creation is the problem. Banks can create money. Right? Money creation is the problem. Money creation will lead to inflation in the economy. Central bank money creation is more dangerous than the other banks. Why is that? That we have to discuss. Central bank borrowing is more dangerous. Then borrowing from, okay, we'll discuss this, but let's finish this external sources, foreign sources. External sources, borrowing from donor countries, China, India, West Germany, Dubai. Now the Oman has granted a loan of $300 million to buy oil to the government, donor countries. Borrowing from international lending organizations such as World Bank and ADB, foreign sources. Borrowing from international banks and Euro banking system, borrow. Or you can go to the market and borrow from at the market rate. So government has to finance the budget deficit. Either you can borrow money from the foreign external sources or the foreign sources and the domestic sources. Domestic sources, borrowing from non-banking sector, banking sector, central bank. Foreign sources, donor countries, IMF, the World Bank, ADB, then the international banks system. Whether you borrow money from the domestic or the foreign sector. Benefit, very clear. What does that mean? Government can finance the deficit. That means government can implement their resource allocation plan. They can allocate money to education, they can allocate money to highways, they can allocate money to health, they can implement that. They have money, enough resources. If you finance, but cost is different from different sources. You read first. Is it correct to say that over budget deficit and necessary inflation? Inflation, right? We'll discuss. Borrowing from domestic non-bank private sector. Here the government borrows the existing savings in the private sector, and therefore EPF, ETF, private provident funds. There is no new money creation by this method. No money creation. Why money? Let's discuss why money creation is bad. Because people demand money. Parties demand money. Central bank, from this side, you supply money. Demand and supply. Money demand, money supply. If demand and supply matches, why people demand money? For transaction demand, speculative demand, the precaution demand, transaction demand. Buy goods and services, they need money. Speculative demand to buy shares. Investment purposes, people, agents need money, demand money. Then the precautionary demand to finance. Whether tomorrow you will fall ill, you have to hospitalize, you be hospitalized. Asiri or the Navaloka or the private hospital, some operations, you don't know. Life is lots of uncertainties. Financing these contingencies, you need money. Precautionary, speculative, transaction. They demand. This is the demand side. Then money supplies. Money supply is there. M1, M2, M2B, M4, M5. Total supply. If the total supply and the demand matches, no issue. What is the issue? People demand for their purposes to goods and services in the economy. Demand is equal to the goods and services. So, but money supply is higher than the demand. People have more and more money in the economy. Demand is less. Then there will be excess supply of money. Excess supply of money is bad. Take example. Now by tomorrow, all the private sector, all government institutions, ministries, triple the salaries and wages of their employees. Triple tomorrow. Today, if you are getting 1,000, tomorrow you will getting 3,000. Your friend is getting 2,000. Tomorrow you will be getting 6,000. What will happen? You have more and more money. But goods and services in the economy, same. You demand money to buy goods and services, value of goods and services, same. Now we have higher money, circulate more money among the people. Then what will happen? Goods and services limited, prices of these goods and services increases. Inflation. Excess supply of money is bad. When you create money, that tendency to increase the supply. That is bad. Excess supply of money is inflationary. Inflation, right? For example, the mega inflation is there. Mega inflation is 5,000. Now our inflation rate is the 7%, 8%, around that rate. But during the World War period, countries experience hyperinflation, mega inflation, huge inflation, 5,000%, 6,000%. Then they were paid the half-yearly basis. In the morning they were paid their salaries. In the afternoon also they paid their salary, not monthly, right? So the prices of goods and services increase, huge increasing. People use some stories for their wheelbarrows to bring the money to the shop. The wheelbarrow is the more worthy than money. Hyperinflation. Put hyperinflation or the mega inflation on the Google. Get very interesting examples. In Germany, you had 1930s, you had the mega hyperinflation. We have never experienced this kind of hyperinflation. Huge increase in prices. Tomorrow, this time, price of a kilo of rice is 110 rupees, let's say 120 rupees. In the hours time, in let's say 5 hours time, it will go up to 250. Hyperinflation. Huge, very fast increase in prices. Mega inflation, right? Okay, now this money creation is not always bad. As long as demand and supply matches, no issue. Excess supply of money creation is the bad. So the government, now this is borrowing from the domestic non-bank, EPF, ETF. Here the government borrows the existing savings in the private sector. And therefore, there is no new money creation by this method. Underline that. Hence, it is not expansion. Expansionary, another name for this one is inflationary. Expansionary, take down, inflationary. It is not inflationary. However, an undesirable effect would be that with the government utilization of the available private savings, private sector would be denied so resources to that extent. That is interesting. To finance their budget, government get more and more resources, financial resources, even from the banking sector, non-banking sector. But then what level resources available to the private sector will go down. Private sector investment will go down. This is called in economics crowding out effect. Government could crowd out private investments. Private sector doesn't have enough money. Private sector doesn't have enough money. Even EPF, ETF, they are money. They are the money resources are with the bank. With the bank, no, the government get more money from the EPF, ETF accounting purposes. Then what will happen? Private sector is denied. Right? Say no, we can't give you overdraft. We can't give you money. If we have a request for 300 million rupees, but we have at the moment we have only 100 million. That is called crowding out effect. Government crowd out private investment. Crowding out. When government get more and money from the non-banking sector, available financial resources, private sector doesn't have enough resources. They cut down their investment. That is called crowding out effect. Take down. Crowding out effect. That is the thing. It is not inflationary, but can crowd out. Borrowing from the commercial bank. This is inflationary because it leads to an increase in the money supply. Why is that? Commercial banks can create money, could create money in the economy. Money creation by granting loans. They accept resources. 10% of the giving 10%. They create money. You lend this money at a 15 rate, higher rate. They can create money. Money creation is there in this process. Money creation is, they can create money. Multiply effect is there. Borrowing from the central bank. This is highly inflationary because such borrowings create high-powered money, leading to multiple expansion. Now I will explain that. What is the high-powered money? Now I'm going to the board. Please tell me, can you see the board? If you can't see, please tell me. High-powered money. Now there is an equation. It's easy to understand using the equation. That's an equation that relates the central bank money and the money supply, overall money supply in the economy. Overall money supply and the central bank money. M into H. This is called money supply. This is called money multiplier. This is called high-powered money. Or another name for that one is reserve money. Or another name, base money. Base money. This is central bank baby. Central bank is responsible for creating high-powered money. High-powered money. High-powered money. If they create high-powered money, let's say 5 billion, if the money multiplier is 6, what will happen? Money supply in the economy will increase by 30. M will go up by 30. Understand? Central bank, high-powered money increased by 5 billion. Money multiplier is 6. So the overall money supply increases by 30 billion. That is dangerous. That's why there's a tendency to create excess supply of money in the economy. That is expansion, inflation. That's why it is bad. Understand? That's why it is bad. That's why it is called central bank borrowings is bad. Commercial banks also could create money. So what are the high-powered money? High-powered money, net credit to the government, net central bank net foreign assets, net other assets. So in the high-powered money, there are various components. Various. So when you give government, when the central bank grant more and more loans to the government, net credit to government increases. High-powered money increases. When central bank acquire more and more the foreign assets, net foreign assets increases, high-powered money increases. Money supply, multiply. Multiplier times money supply. That's bad. Then that will create excess supply of money in the economy. That will be inflationary. So there's the allegation, huge allegation in the social media, political arena. Central bank create money. Central bank doesn't issue printing money. Printing, this is a very loose term, of course. Very bad term. Economists use very bad term, right? Printing money is you print and you the issue to the economy. No, you can't do that. How does the central bank give money to the government? Now, when government needs money, they issue treasury bills, treasury bonds. What is treasury bill? It's a piece of paper. Sometimes scriptless is there. Piece of paper. Some agreement, scriptless agreement. 3 months, 6 months, 90 days. The 3 months, 6 months, the 1 year, the treasury bills are there. More than 1 year, treasury bonds are there. People, institutions can buy these treasury bills. It's a piece of paper. Sometimes scriptless, it's an account. You can buy. So when government borrow money, government asks central bank to, if they, let's say, if they want to buy 1,000 billion for a particular week, then ask central bank. Because the central bank is an agent for the government. Central bank issue, announces. Okay. Now we are going to issue auction 1,000 billion worth of treasury bills. Right? Why? For what? To get the money to the government budget, treasury. Central bank is the agent. Treasury doesn't announce these auctions, no? Central bank announces. This is to the public. Now sometimes the radio today, now tomorrow, this week you are going to auction 1,000 billion million worth of treasury bills. You can bid. Banks bid. People bid. People buy. If I have money, 20 billion, I will buy 20 million worth of treasury bills. Right? You have money, one of you have 100 million, you buy 100 million worth. Banks also use their funds to buy these 1,000. You borrow. Then what will happen? Let's say of this 1,000 billion, central bank or the demand, there was a demand for only 800 million. 1,000 billion is there. 800 billion were demanded, purchased by other parties. Then balance is how much? 200 billion. That is the problem. Unsold treasury bills and bonds are purchased by the central bank. Then what do? Central bank say, okay, I'll buy. We will buy. Then equivalent amount of money is given to the treasury. That's why people say money printing. Understand? Money printing means central bank has the huge vaults. Prove that using the lorries, they don't deliver money to the treasury. No. Right? Unsold, that's a huge, very, very scientific basis for that. Unsold treasury bills and bonds are purchased by, amount is purchased by the central bank. Central bank can say no, but unsold amount is purchased. Otherwise, you can give the 1,000 to the government. Then, equivalent to this 200 billion, central bank create money, create high-powered money. When they create high-powered money, what will happen? High-powered money times multiply, money supply increases. That's why people say printing money, right? That is the argument. Understand very clearly. Being a student learning the economics, you have to learn when you say money, printing money. What does that mean? Central bank should deliver the notes and coins to the treasury? No. Unsold remaining, whatever the remaining amount are purchased by the central bank. That means it will add to high-powered money, H. High-powered money increases by that amount. Let's say 200 billion, 200 million times 6, 1,200 billion. Money supply increases. When money supply increases, it will definitely exceed the demand, excess supply of money, inflation. Excess supply of money. People have more and more money. Goods and services, less than the excess supply of money. Value of goods and services less than. Then what will happen when people come and buy? Price will go up. Understand this. This is a very important point because sometimes people misunderstand these economic concepts are presented the wrong way. Money printing, right? Wrong way. But it happened in the who is this Uganda. One of these the presidents long time ago. When President Uganda, the rise and fall of who is the president? Can you remember Uganda? Who is the president? That's a very bad country. Long time ago, 1967, 80s, it happened. Uganda president. Who was the Uganda president? There was a film also, Rise and Fall of. That was a film. This president, if they want money, they went to the central bank, got the truckloads of money. They asked the governor, this president also is Uganda president. Is this I can't. So where the money is central bank governor say no sir, you can't do that. There's a way of issuing money, giving money to the government. You can't do that. Sack the central bank the governor. Sometimes some people say cut his the hands and the Idi Amin. Good. Thank you, Tishara. Rise and fall of Idi Amin. Yes, thank you very much. When he did that, he went to central bank, Uganda central bank, with the truckloads, got central bank money. Speak to Idi Amin talk to the central bank governor. Governor, they are very educated people. They say no, you can't do that. Then cut nose of this the central bank governor, sack him, appointed one of these military people to this as a governor, got all the money in the bank vaults and bring that to the treasury. That is Idi Amin method. That is not the case. But after that, so the countries can't do that. That is the real issuing of circular, real notes and coins. Then you distribute. That printing money, the real meaning is that the central bank tend to increase the high-powered money through buying unsold amount of bills and bonds. When they buy high-powered money supply increase by multiply times high-powered money, it will increase and supply. That is the bad thing. It is inflation, it is expansion. That's why economists don't recommend the government to buy treasury to finance ministry to get money from the central bank. But last year before, we didn't have any choice because there is pandemic. Partly due to pandemic, you borrowed money from the central bank. That will be inflation, right? Okay. Now we'll go to the lesson again. Borrowing the central bank we discuss. Because if you borrow money from the commercial banks or borrow from the central bank, borrow from the EPF, ETF, benefit is government can finance the budget deficit. Government can implement their resource allocation plan. That is true. Cost, each source has different costs. Some are inflationary, some are not inflationary, some are highly inflationary, are very bad. It will create to the mega inflation, hyperinflation. Then let's see what happens. Borrowing from foreign sources. What will happen? Foreign sources. This is also inflationary. Since the government has to acquire local money by selling its foreign exchange holdings, what will happen when the foreign government of China or India or the ADB or World Bank does not give money in rupees? No, they give money in dollars, foreign currency. Then central bank is authority. Central bank buy these dollars. $1,000 buy, central bank buy these dollars, issuing equivalent amount of rupees to the treasury. They acquire net foreign asset. These dollars coming to some countries' assets, foreign assets. Foreign assets increases equivalent amount of money given to the treasury. Then what will happen? It is like creating high-powered money. The central bank purchase those dollars, acquire those dollars. That is high-powered money increases. That's also bad. Foreign sources also, borrowing from the foreign sources also bad, right? It will tend to increase the high-powered money, reserve money or the waste money, right? Okay, excuse me. Right. However, the expansion impact of foreign borrowings can somewhat be mitigated if there is a deficit in the overall balance of the balance of payment. That is the link between you this is because in such situation on a net basis money would be flowing out of the country instead of remaining in the economy, right? Consequently, inflation nature of the budget deficit is equal neutralize. You can't neutralize. You can neutralize this impact. You give money at the same time, central bank issue bonds equivalent amount, domestic operation department bonds equivalent amount, then you can neutralize the impact of money creation. Foreign borrowings, if you don't do that, it will lead to high powered money. At the same time, central bank can do the other mechanism, issue bonds and neutralize this impact. Neutralization can be done to some extent in the case of the foreign borrowings, adverse effects of the foreign borrowings. I will explain that again. Inadvisable for a government to run a continuous budget deficit. Continuous budget deficit. Think about that. Read that. These are easy. What are the strategies which can be adapted to reduce the eliminate budget deficit? Strategies. Very interesting. Try to get higher revenue through various tax measures. We don't know. It should be innovative. We don't know. Luxury cars, luxury vehicles, the ownership of wealth, ownership of assets, ownership of condominiums. So then the income taxes, pay taxes, increase in value-added taxes, like that. You can design various taxes. It should be innovative. It should not harm people's living standard, people's purchasing power. But government needs money. You see, revenue is going down from 12% to 9% now, GDP. You have to do something about it. Now, this budget proposals, through this budget, tax proposals are very important. Revenue proposals are very important. For the expenditure, remember, the other policy is to cut the expenditure. Cut what expenditure? Either recurrent expenditure or the capital expenditure. Recurrent expenditure, you can't cut. It's very difficult to cut. You can't say you can't cut people's salaries and wages. You can't say no to the interest payment. You can't say no to the transfer payments. Right? Then only source is the capital investment. Capital projects already they're at a minimum level. We finance all capital projects through borrowings. That's very difficult. Now these are the methods. Raising the government revenue to the level of potential revenue. At present, the total tax revenue amount to 15% GDP. This is wrong. Please cut this number. This is 9% of GDP revenue. This I have not updated. The 2019 it was 12%. 2020 it was 9%. No revenue. Sorry. I'll go through this one. Revenue 12%, 9%. Total revenue 12% to 9%. That is the issue. Raising the government revenue to the level of potential revenue. At present, it is not 15%, it's 9%. Hence, it is possible to improve the budgetary situation by adopting suitable methods to maintain the tax revenue at its potential level. Increase value-added taxes. That they reduce but increase tax. Increase the import duties of the sugar and the other some items. It might increase the consumer prices, right? Increase import taxes, right? Increase the value-added taxes and the sales taxes, like that. Then what will happen? What will happen? The taxes, the increase in taxes. Yeah. For the government should increase the non-tax revenue income by maintaining efficiency in the government enterprise and eliminating losses in such enterprises. Right? Non-tax revenue, public enterprises, government public enterprises, transfer part of their revenue to the government consolidated funds. Then by minimizing the efficiencies, wastages, you can get higher revenue, and through that they can get higher revenue as a non-tax revenue. Right? Curtailing government expenditure. This is at present it's very difficult task. You can argue against this slide, especially the current expenditure. You can't do that. Very difficult. The current expenditure of the government amounts to about 15%. Please, that is also not correct. Of GDP, representing mainly salaries payable to government employees, pensions, and interest payments on public debt. All these sources can be effectively checked by rationalizing the budget and adapting suitable, efficient, and creative methods of government. Now, this thing is, now there is a point here. Government can, at present, we are paying all the interest. We have default our loans, interest payments, right? Another method, when you have the economic difficulties, not only in Sri Lanka, countries have rationalization of government debt. This is the term, rationalizing the government debt. What does that mean? You go to your donors. This year, if you have government tax liability, your payment of the loan liability is about, let's say, 1,000. You talk to your donors and you say, okay, we are in a difficult situation. This year we can't pay 1,000. This year we will pay 500. Next year another 500. Or you can say this year 500, next year another 100, next year another 100, next year another 100, like that. You rationalize, take time, buy time to pay. That is called rationalization of this government debt rationalization. That sometimes moratorium means please, please write off your loans. Please. That moratorium can be asked. Rationalization of the debt rationalization. You can't pay, we are in trouble, we can't pay you. So that by doing that, interest payments in the current expenditure, you bring down to some extent. Capital payment, also the capital is coming under the capital expenditure, that also can be coming down. Right? So that is another strategy that this government can go. Rationalization of debt. Rationalization, you access discussion with the donors, then the debtors, then your borrowers, then have a rationalize, revisit your debt structure and get some time to pay your the liabilities. That they might do that. Other thing is sometimes because of the external sector issues, the people say, why don't you go to the IMF? IMF, you credit to finance the external sector difficulties. If there are huge balance of payment issues, IMF give short-term credit to those countries. Short-term credit to those countries. When the country reserves are hugely dropped, they have huge balance of payment deficit. Next lesson, you have a budget deficit, balance of payment. Then IMF come and help them. You say they approved 1.2 billion the overall the dollar loan. Then in tranches they give. This year 1 billion, next year 2 billion, next year 3 billion, like that. Tranches. Some kind of conditionalities will be there. That is there. If you pawn your loan by pawning the jewelries, you get. But the banks get the jewelries. Bank has if you don't repay, you get that. No lender. But especially in these the countries, IMF like that, there are some kind of conditions. We don't know. Some kind of conditions with regard to the the privatization, with regard to the cutting down of some other unnecessary expenditure, stopping of this wastage for the some huge development projects. You don't know. We give these loans, but you have to do this, right? This might be the reason that government the government is still reluctant to seek IMF assistance, right? So, very well-known economist in the country, they always advocate the right to papers, they go to IMF. That is the other option. Or rationalization debt is the next option also, but it is not effective. IMF, going to IMF is the another option. Curtailing welfare services, very difficult to cut. You can't cut something, you can't cut other benefits, right? Privatizing public enterprises so that loss-making enterprises could be transferred to the private sector. That's also some possible, but still there are some public the objections, right? So in the port we saw those the rallies and the objections, right? Now it's again the Kerala. People don't like. People don't approve. People generally they say giving 40% to Indian company is bad, right? Like that, it's very difficult to give. You can't privatize the CPC because they are making losses. You can't privatize CB because they are making losses, huge losses. You can't do that. Then other issues will be there if you do those things. Try to do elimination of wastage of government. That is good thing. Corruption, wastage, bad decision making, granting without following these proper procurement procurement policies. They grant these government the contracts were given to the highest bidder, not to the lowest bidder. Some kind of favorations are there. These kind of wastages, the corruptions are there in this is the fact in most of the countries, but here in Sri Lanka also you can see prudent capital expenditure levels affordable by the government. Again, we have cut our capital expenditure to minimum level. Relying on private sector for the development of infrastructure by developing methods such as build, own and operate. Like BOO, build, own and the transfer. That is in Hambantota, the ports we have given like this: build, own and operate, and build, own, operate and transfer. BOOT. Build, own and operate. BOO. This kind of investment arrangement practices are there in the world. So after some time, they transfer the assets. After 99 years, 50 years time, they transfer these assets to the government, right? This is another approach. Please read. Increase productivity. Please go through this last session also. What are the constraints for Sri Lanka to avoid the above measures, right? So this, please, this is a very good note. I think I based this note some write-ups by well-known economists in Sri Lanka, still the professors. So I used all their writings and prepared this budget. Please, everything is there. Please read and understand. Everything about the budget is there. Deficits, deficit financing, consequences of deficit financing, high-powered money, central bank interventions, then the some of the policies, constraints, hindrances to budget financing. Right? Okay. Thank you. Now we will go to the next lesson. Yeah. Right. Right. Now for this lesson, I am not giving, this is a short lesson, I am not giving an handout. Right. That is the foreign exchange market. Foreign exchange market. Foreign exchange market, foreign exchange, the market. Now we discuss market for rice, market for bread, market for paddy, like that. Micro level micro markets. Foreign exchange market is another market. How do you identify a market? There's a demand for the product, supply of the product. The foreign exchange market, foreign exchange, foreign currencies, foreign exchange are transacted. Foreign exchange, dollars, quantity of dollars, price of a dollar, quantity of dollars, price of a dollar, quantity of pounds, price of a pound, quantity of Japanese yen, price of a Japanese yen. When I say price of a Japanese yen, price of a dollar, price of the sterling pound, what is that price? This price is called what? Can anybody answer? What is that price? Demand for dollars, supply of dollars, determine price of a dollar. Demand for yen.
Market price.
Yeah, sorry.
Market price.
It is called what? There is a name for the exchange market. You are right. It's a official name. Demand for dollars, supply of dollars, determine price of a dollar. What is that? Panduga?
Exchange rate.
Exchange rate. Good. Demand for dollars and supply of dollars determine the price of a dollar. That is 202.50 exchange rate. Demand for yen, supply of yen determine the price of a yen. Price of a yen today's it is 177 rupees. Exchange rate. Then demand for Australian dollars, demand supply of Australian dollars determine the price of Australian dollar. That is that is exchange rate. Aussie dollar 202.05 exchange rate. So exchange rate is what? Now I am going to the board. Yes. What is exchange rate? Exchange rate is if you take a dollar, quantity of dollars, price of a dollar. Price of a dollar is exchange rate. Exchange rate is rupees per dollar. Rupees per dollar. If this is coconut, quantity of coconuts, price of a coconut, rupees per coconut, something like that. Same as in microeconomics. Quantity of rice, price of a rice, rupees per kilogram of rice, something like that. Quantity of dollars, this is the commodity. So you have the demand for dollars and supply of dollars. DD, SS. Then you have the price of a dollar. You have correctly said that is 202.50 exchange rate. Exchange rate, that is 202 today's exchange rate. Today's exchange rate is 202.05. Dollar, the Australian dollar is different. Australian dollar is 259, I think. I have written down Australian dollar. Australian dollar is different. Here, 151 Australian dollar, right? This is rupees 202.50 equals $1. Rupees 151.8 equals 1 Aussie dollar. Then rupees the Singapore dollar. Singapore dollar, one Sing dollar is the 149.80. 149.80 equals 1 Sing dollar. Like that. Then you have rupees, Indian rupees, the Indian rupees, the 270. Rupees 270 equals 1 INR. Rupees 1, the Japanese yen, 177 equals 1 Japanese yen. Right. Okay. These are the exchange rate. What is the exchange rate? The rate at which two national countries' currencies are exchanged. 1 US dollar equal 250. Two national currencies, US dollars, rupees. Australian dollar, rupees. Sin dollars, rupees. Japanese yen, rupees. Two national currencies at that exchange rate. It is the price. This is the price of a dollar. This is the price of Aussie dollar. Price of a Singapore dollar. Price of a Japanese yen. Price of a Indian rupee. Like price of a coconut. Then, in a free enterprise economic system, these prices are determined by the interaction between demand, if you take one currency, demand for dollars and supply of dollars. Now we will discuss demand for dollars depends on what? Demand for dollars depends on what? Tell me. You have two currencies, two countries. What are the countries? Sri Lanka, US. We are here. We are here. You are here. Sri Lanka. Who demand dollars? Tell me, who demand dollars? Who demand dollars? And for what? Who demand dollars? Tell me, Gayatri, Arukshi, Safar, Swasha, Irani. Who demand dollars? Who demand dollars? Countries' demand for dollars depends on what? Yes? Demand for dollars depends on what? What? Who demand dollars? You have rupees. You want to buy a car from Japan, produced in Japan, or some item produced in USA. Let's say the Apple, the iPad produced in USA. You want to buy that. You want to buy. You are an importer. You want to get 10 Apple the computers or the iPad from USA, right? Then what do? You have rupees. You are Sri Lankan. Then what do? You go to the bank, open an LC, you surrender your rupees and demand dollars. For what? To buy the goods produced in US, right? Imports. Demand for dollars coming from imports. Imports of goods. To import goods, you need dollars. Then, and services. If you want to buy a house in the Washington or New York, then you have rupees. You want to buy that house, right? Then you go to the bank and surrender these dollars, rupees, and ask dollars. Reason is you want to buy the house in US. Other regulation, forget about this. Other regulation you have, whether you are into position to buy capital goods, exchange control will come and they catch you. This is different now, but demand for dollars coming from two sources: imports of goods and buying purchases of assets in US. Imports. Goods and purchase of assets in US, in foreign countries. The imports. That is the one source. You want to buy
And
goods.
also, sir, to pay foreign debts.
Sorry?
To pay foreign debts also, sir.
Foreign debt, yes. Right. Okay. Goods and services, yes. Purchase of assets. Foreign debt, yes, you are right. Foreign debt, yes. That is also, you demand dollars. Central bank, government has to pay their foreign debt. Then government asks central bank to make this arrangement to pay the $1,000 or $1 billion, $1.5 billion to foreign country. Then central bank demand dollars. Central bank is also a player. Importer is a player in the foreign exchange market. Individual, if you want to buy a house, you are also a player. You are right. To buy all these. Repayment of dollars, repayment of the loans, also one component. Thank you. That is demand. Supply. Who supplied dollars into the foreign exchange market? Now we go to the other side. American citizens, sometimes they want to buy some designs from MS. brandings, some new clothes, newly designed garments from the mass or brandings to buy goods produced in Sri Lanka. They supply dollars into foreign exchange market. Or American citizen, those who, if they want to buy assets in Sri Lanka, a land in Sri Lanka, forget about the exchange control regulation, other things. If they want to buy land in Sri Lanka, if they want to buy the hotel inside the gold port, it is now prohibited. If you want to buy, they supply dollars. They supply dollars. That is the exports. Then the buying of Sri Lankan assets. So, foreigners, those who want to buy assets, those who give sometimes loans, those who want to buy assets, buying assets mean the buying real assets, a building, hotel. Or you can give a loan to this one of these MAX, John Keel's loan. Or you can buy equity. You give the loan to the John Keel's and buy some shares of John Keel's company. Equity investment or loan investment. You can give loans to the John Keel's like that. Supply depends on exports of dollars. The demand depends on imports of the dollars, goods and services, as you said, paying the debt like that. So interaction between demand and supply of dollars determine the exchange rate. Interaction between demand and supply of yen determine the exchange rate between rupee and the yen, like that. Okay. Now this exchange rate, if you allow market forces to determine that nobody can intervene, no intervention, purely market forces. Now these days rice prices are determined by the government had issued some gazettes, then they remove all these gazettes. Now the market forces determine the price of rice. Rice price is increased or fluctuate sometimes, right? Then the sellers or the wholesalers determine the price of rice, wholesale price depending on demand and supply. Retailers determine price of rice, determine the demand and supply. Yeah, if you allow market forces to work, this is the price exchange rate. But thing is, this is not possible every time. Some kind of intervention is there. Central bank intervention is there. Was there, for example. Now from 1950s to 1977, till 1977, we had fixed exchange rate regime. Central bank fixed the rate, maintain that rate. That is the exchange rate. Then from 77 to 2001 June, we had some kind of the managed floating system. That is also called dirty floating. Managed floating. Every day in the morning, central bank issued the exchange rate, released exchange rate. Then central bank allow market forces to work, of course. 75-10, 75-15, 75 the 80. Then following day maybe 76-1, 76-2. It is the fixed component and the floating component is there. From 1948 to 77, fixed exchange rate. 2 times there's some devaluation was there. But from 77 to 2001, it is a combination of fixed and floating. 2001 June, central bank announces no more fixed part. We allow market source to work. It is the market determined rate. Central bank will be also a player in the foreign exchange market, right? That is theoretically. Remember, always I say theoretically, exchange rate should be determined through the market forces, interaction between demand and supply forces. That is demand and supply, demand for import, supply of exports, goods and services, interaction between demand and supply. But it won't happen. Central bank, and as an argument, central bank could intervene. Central bank is a player. Some national interests are there. When you allow market forces to work, sometime exchange rate might go to 300, 400 rupees. Then the huge impact on the economy. Import prices, sugar price will go up. Price will go up. The dal price will go up. Most of the imported items will be expensive, right? That is, then sometimes it mainly general public might be affected. Therefore, they argue, okay, no, we are a player, we have responsibility, then we intervene. But there are some adverse effect when you intervene. For example, if you allow market forces to work, what will happen? Let's say exchange rate 200 to $300 rupees per dollar increase tomorrow. What will happen? How does the consumers respond? My question is, how do consumers respond? Definitely consumers respond. If the exchange rate is the 300, the importer price increases, fuel price increase. Now it is, let's say, 175. It increases to 290 per liter. What will happen? How do you make adjustments? Exchange rate increases 100%. The market forces determine price determined by the market forces. How do the consumers adjust to that one? Tell me. You know the reason. How do they adjust? Tell me the reason. Swasha, Rafal, Saranga, you can do that. Let's say fuel price increased to 300 rupees per liter. Lalani, how do they adjust? You cut down consumption.
Then consumption we have to restrict it.
Yes, to cut down consumption. If you are restrict, you cut down your daily travel. You won't go to office. Sometimes you might take some the collectively you buy the hire the van services are there, bus services there. You don't use your own vehicle, right? You cut down the consumption, right? Now the LP gas, it increased around 1,000 rupees, 1,125 to 2,000, 2,750 increase. People adjust. Urban sector, it is difficult because urban sector houses, there are no room for use some other sources. Firewood cannot be used. But rural sector, people will start using firewood. They have enough firewood. Sometime when the fuel price, you can go to the supermarkets and check now. In some shelves, I checked last week, the Indian made kerosene lamps are there. Huge stocks are there. People buy kerosene oil. The consumption. So that's interesting. People adjust. Of course, their cost of living will go up. They can't cut. They have to cut, reduce other goods and come to the LP gas. If you don't have no other way to adjust, they do that. Sometimes they might go for firewood, buy kerosene oil. I saw some consumers came and check the prices of it. That is, they want to make some adjustment. So that is the thing. There are two arguments. Let the market prices to exchange rate to be determined purely by the market forces. Don't worry about these things. Exchange rate will go up. Then consumers will make the adjustment. But in the country like Sri Lanka, it is a bit difficult. Some of the food items, investment good, fertilizer will go up. Price will go up. Now I saw one of these professors presented yesterday on the telly. Last year, urea metric ton was around $210 per metric ton. This year, now it is $800 per metric ton. Then there's a forecast, it will go up to $1,000 per metric ton. Then selling price of urea in the market will increase by about 100%, 200%. It will come to about 5,000, 6,000. Then what will happen when you buy farmers, if they buy these, use somehow or other, if they afford, if they can afford, it will apply. Price will go up. Price of rice will go up. Price of paddy, price of rice will go up. That is the thing. International prices are rising. International prices are rising. Oil price, crude oil prices are rising. LP gas prices are rising. Then the milk powder prices are rising. That is the problem faced by not only Sri Lanka, all the other countries. But social media has some other argument. I don't say the deny some other the corruptions, maybe some procurement processes may be wrong, not wrong. You purposely give this procurement to some of these the favorites. So some favoritions are there. Agreed. But that behind that everything, international price rising is there. That is the problem, right? Okay. Now this is a starting point. Next week I will finish this different exchange rate, fixed exchange rate regime, floating exchange rate regime. What are the consequences? Then we will go to the balance of payment account for the rest of the world, import export trade, then impact of the exchange rate on the balance of payment situation. Okay, we'll stop now. Thank you very much. We'll see you all next Saturday. Right? Thank you, Aishan. Thank you. Right. Please read this chapter here. Gayatri, thank you. Thanks all. Thank you all. Yes. We'll see you all next Saturday. Thanks.